What's going on, guys? Y'all already know who it is, man. It's your boy, Stunner Breezy, man. Y'all know how we gonna do. We get straight to the money. You know what I'm saying? Because the money moving fast, and some of y'all got them short arms, and you can't get your money. You can't get your hand out there to get it. You know what I'm saying? But I'm gonna help you out a little bit, man. Look, y'all know we in the crypto, and boy, crypto, that's the move. But Nvidia moves like a crypto. Nvidia moved like a crypto, man. That thing came from number 11 to number 1 almost overnight. You understand what I'm saying? But see, you have these people in these financial markets, you know what I'm saying? They kind of, I don't know if they doing it on purpose or they just don't understand. I'm going to help you understand, guys. So anytime you see Nvidia, just come back to my words, you know what I'm saying? So if somebody talking about Nvidia or saying this, I'm going to give you some stuff to fire back. So I'm going to let this guy, let him talk, let you hear, and I'm going to come in and let you know the real deal. So I'm going to let you hear what he got to say. You know what I'm saying? Let's see what we got. Let's,
In my decade plus as an investor, I have never seen the ascendancy of a stock to quite match what's happened with Nvidia over the past 18 months. So it all begs the question, what do we think of the stock's valuation right now? I mean, we're talking about a company that's now worth $3 trillion and just recently was the most valuable company on all U.S. markets. Well, let's spend the next couple of minutes trying to figure that out. My name is Brian Stoffel. As of the time of this recording, I do not own shares of Nvidia, although I certainly would love to have gotten the returns that many of you have already gotten from owning it, and hats off to you for doing that. Now, for those of you who are unfamiliar, you might be wondering, why should I care about what this person has to say? Well, I've written over 4,000 articles for The Motley Fool. I've got hundreds of videos here on YouTube, but perhaps most importantly, I track my results. And these are results without the benefit of Nvidia. And as you can see, my portfolio right here is the blue line. You've got the NASDAQ composite, S&P 500. All of this was accurate as of the beginning of this month. With that out of the way.
Now, first of all, he tried to get that out of the way real quick. Like, I don't have no shares of Nvidia, right? I got 9+ years and I got all this charting and all this, but you missed out on the one meteoric rise stock in the world. When you got all these numbers you finna show and all this stuff, and look at my chart compared to no. Ain't nobody to verify that. You know what I'm saying? You just like all these YouTubers be saying all these fake prognostications. Then when they wrong, you delete it. Come on, man. We know how this works. Who gonna come back and say, yeah, he right? No. How do you call yourself this stock expert and all? I do the numbers, I research, and I know this and I know that, but you missed Nvidia. Not one share. Not one share. I bet you got some Hewlett Packard, some GE, some Walmart. I bet you got all that, but you missed Nvidia. You missed it. But you finna proceed to tell me how it ain't this and ain't that. But I don't want y'all to catch that. He ain't got none. He missed that. He didn't happen to get one share in the past 10 years. But let's keep it going. Let's go. See what he got.
You're going to see me using their platform a whole bunch during this video. So let's just look at the ride that we've been on with Nvidia. Over the last 5 years, just 5 years, this company is a 33, 34 bagger. It's 34x'd in just 5 years. And if we just go over the past year, it's tripled over the past year. If we just go year to date, it's up 162%. If we just look at the last month, it's up 33%. And this is happening off of a base of a company that's in the $1 trillion range. Our brains don't believe that companies can continue to grow at this pace, and yet they clearly can, or at least their stocks can. But what about the valuation right now? Well, for that, we're going to go first to finchat.io. Now, this is a tool I use every day, and if you want to use this, you can try a free trial by clicking on the link below. If you decide to subscribe to it, for full functionality, you'll get 15% off by using that link. So first, we could just go to FinChat and we can just look at the company's basic metrics. And so what I pulled up here, this is the company's price to free cash flow ratio, currently clocking in at about 82. As you can see, That's high on an absolute basis. It's about in line with where it's been pretty much since the pandemic. And so you might say, well, kind of seems reasonable, maybe. What about its forward price to free cash flow ratio? That's actually just 52, which shows you how much growth in free cash flow the market is expecting. And that's important. But these basic metrics, I think, are one data point. I think that we can get even better data points if we do a reverse discounted cash flow analysis. Now, the reason is not because it spits out a precise number that it's worth. Valuation is inherently, and this is so important, it is inherently an inexact science. We just do this to get a ballpark estimate of what kind of assumptions does the market have about what this company might do based on the stock price? So that's why I'm doing it. We want to be very clear about that. So this is what the reverse DCF calculator looks like. But the first thing that I need to do is I need to ask myself, what type of free cash flow margin do I believe Nvidia could have over the next 10 years? Now, this shows what it's had over the last 10 years. And as you can see, roughly 30% free cash flow margins were a high watermark. They did reach 40% during the pandemic, largely because of folks using their GPUs for cryptocurrency, and they've exploded to 50% free cash flow margins over the past 2 years, largely because of AI. Now, I don't think it would be prudent to say that they could keep it at 50% free cash flow margins. I am not a computer scientist. I am not someone who inherently understands the advantages that Nvidia has, the head start that it has in the AI space, which with its GPUs. But what I do believe is that over the next 10 years, there are scores of companies that are financially motivated to come up with a good enough alternative to what Nvidia has to offer at a more reasonable price. And this is not just chip makers, it's the people that buy chips from Nvidia, the Metas, the Teslas, the Googles, the Amazons, the Azures. They're motivated to have a cheaper GPU as well. And so I think if we assume...
See, here's the problem with that. And I was gonna wait to let him finish, but I wanna hit that while you let this marinate, right? First of all, he tried to downplay the AI revolution, right? Like it's just gonna be some little small fad to come by, like the .com bomb or something, the era or something. But you can't have it both ways. You can't say Nvidia is not gonna make it because they rely on AI, but then on the other hand, say Elon Musk is this great inventor because of AI is you know what I'm saying? You can't have it both ways. I don't understand how people, but I get it because he doesn't own Nvidia. So you got to justify the reason you don't see what's going on. You see? So you always got to go back to that. He doesn't own Nvidia. So he got to say this kind of stupid stuff. You know what I'm saying? Like, and I don't want to jump ahead of myself because I've already seen the video. So I'm going to say something else in a minute. But bro, Nvidia is so far ahead of the competition, right? First of all, they service Google, Microsoft, Apple, Facebook, Meta, Tesla. They service, all of those are their clients. You know why they're the clients of Nvidia? Because Nvidia is the best. You do not buy a Ferrari and get your tires from your local discount shop. That's why you don't see Rolls Royces at the local little tire shop with the garage door up. No. You get only the best. You get Pirellis and P19s or whatever. You get the best. Michelins, run flats. That's why. So there is no... I don't understand what I wish I could debate these people, bro. What are you're saying? Just hollow stuff. Nvidia is the 1,000-pound gorilla in the room. Everybody else is at 1 pound. They're at 1,000 pounds. That's how far out they are. You see this dip right here? You see that? That's research and development. They was already the top dog. They spent more on research and development. Now they way the top dog. Everybody else is back here. They have to go through this. This take years, bro. You don't go from here to here overnight. But I'm gonna let him finish though. I'm gonna let him finish before I say something else. It just, bro, I don't understand.
Assume that Nvidia can keep those 50% free cash flow margins between now and 10 years from now. We're assuming that all of those companies will fail in coming up with a good enough alternative.
Wait, one more thing. We're talking about free cash margins. Like that's just, you see, he ain't comparing it to no other company. Everybody else is down here. Nvidia is up here, even if they can't. Bro, you're not you're comparing the Jesus to Jesus. You get what I'm saying? Like, bro, it just, it baffles my mind how they throw these numbers out like it's regular. You get what this is not regular. But see, they were saying they couldn't do it back here. Oh, you can't get here. Oh, you can't get here. Oh, you can't get here. Oh, you can't. They keep saying that. You know what I'm saying? So I'm gonna let him go.
I don't think that's a very prudent assumption to make. The most prudent assumption, in my opinion, would be to say that Nvidia will have a free cash flow margin somewhere in the 20s. But I'm going to be super aggressive and say 35%. That is super aggressive. 35% free cash flow margins moving forward over the next 10 years. So here's what we do then. We go over to the reverse DCF calculator. We put in the ticker symbol. Now, usually we put in the trailing free cash flow, but I'm actually solving for something different here. I'm solving for how fast revenue needs to grow. Because if we optimize the free cash flow today, optimize it, that means it's steady, then really what we're finding out is how much does revenue need to grow over the next 10 years. So if we assume 35% free cash flow margins, that would be $28 billion in trailing free cash flow for Nvidia. Now, I know it's higher right now. I know that. But in order to understand the dynamics of what's at play, we're assuming those 35% margins. Now, I believe 35% is very aggressive moving forward. And I'm also going to be very aggressive and give the company a 4% terminal growth rate, which you might say, well, I think they're going to grow faster than 4% 10 years from now. But we're saying 4% for all the way out and discounting those cash flow models. That's very aggressive. And when we do that, we need to make these prices match. So we could say, does 20% bring it to match? No. Does 30% bring it to match? Not quite. How about 29? There we go. So 29%. So you think, okay, well, we've got our answer. Nvidia needs to grow its revenue by 29% per year over the next 10 years to justify today's stock price. How reasonable is that? That's the question we ask ourselves. How reasonable is that? Well, let's go back to FinChat. And what we can do is pull up the company's revenue growth rate over the past. And so what we see here is, well, it's been growing triple digits over the past 18 months. So 29% seems pretty reasonable. Now, one nice thing about FinChat is that they include analyst estimates. Now, I know these are just estimates, but again, it's just to give us a ballpark figure of what might be possible. Now, analysts estimate that the company is going to grow revenue by 97%. That's a lot faster than 29%. And 31% over the next 2 years, also faster than 29%. And then slow down to 15%. And it's important to remember that this is a cyclical company. But I've been super aggressive so far. The 35% free cash flow margin, 4% terminal growth rate. Let's go to the estimates and pick the absolute most aggressive estimate for the revenue that the company could bring in 2026, or the year ending January 2027. And right here you see it, $241 billion. So if the company, but the most aggressive, hits $241 billion in sales in 2026, well, I did the math. If the company returns 10% per year, which is exactly what this discount rate is, then it will be worth $8.1 trillion 10 years from now. It will need sales of $1 trillion in order to meet this. So it's actually much simpler than you might think to say, well, okay, so what does the growth rate have to be from 2026 to 2034? Well, we can just plug that in. Remember, let's assume the most aggressive possible assumption of $241 billion. We've got to get to just over $1 trillion, and we're not over a 10-year time frame anymore because we assume that over the next 2 3/4 years that we're getting the best growth possible. If that happens, then revenue needs to continue growing at 22% for 7 years. Think about that, 22% for 7 years. And this is where I go back to the fact that Nvidia is a very cyclical company. Here's its revenue growth rates all the way back to 2004. You can see we have periods of boom and then bust where revenue actually goes down. It grows, it shrinks, it grows, it shrinks, it grows, it shrinks. It has boom and bust cycles. We know this. Now, from 2004 to today, we can look at this and we can see that down here it says revenue has grown at a 21% per year since 2004. And 22% is what we need. But that includes the last 2 years. If we take the last 2 years out and just say, well, maybe it's a little bit more normalized, if we just go here, well, then it's just growing at about a 14 or a 15 or a 16% rate. So again, you've got to remember what we are assuming here is that the most aggressive things are happening, and then the company needs to grow its revenue by 22% per year for the next 7 years. And you just look, it's never been above that 20% rate for more than 2 years at a time in the past. Of course, if it has a boom year somewhere in there, well, that makes it a lot easier hurdle to jump over. But let's just see what needs to happen to land at this 22% rate. So I've assumed that the terminal growth rate is 4%. That's very aggressive. I've assumed the discount rate is 10%, which is not like a super high bar. This is just to get a 10% return on your investment. I've assumed a free cash flow margin of 35%. While that's below where it is today, I think that's very, very aggressive over the next 10 years. Remember, if you want it to be higher that, you're assuming that AMD, Intel, chip makers that I can't even think of, and all the customers, Azure, AWS, whoever, they're not coming up with a good enough alternative over the next decade. I'm assuming the most aggressive growth rate over the next 3 years, which is 50% annualized. And if all of that happens, then
I gotta cut this nonsense. Here's where I draw the line. First of all, you're talking about what they can and can't do, and they've already done it. See, you have to go back in time. They've been saying this forever. Well, they can't do this and they can't do that, and they just keep doing it. You understand what I'm saying? So they always beat analysts because the analysts keep saying they can't do it. It's like I tell you all the time, like in crypto, when they keep telling you, you know you're going to die one day. You know you're going to die one day. You know, but you keep betting on that every year until I'm 100 and die, you're going to lose. You're going to win when I get 100, but you've lost so much, you ain't won nothing. You keep saying what they can't do, then they keep doing it. Then he say, well, I'm doing this because I'm assuming that AMD and Intel, oh my God. They've been kicked. There's a reason he didn't put those, he didn't compare those. There's a reason he didn't compare those. Because they've been kicking AMD and Intel in the teeth for 10 to 15 years, bro. They're nowhere close. And he talking about a company that may come out of nowhere. Who? You just can't, bro, you just can't stop from, Chipotle? You can't stop from doing rice and chicken to making GPUs and chips. It don't work that way. The dude be talking about, I've been doing this for 9 years and this and, what is wrong? You so mad you missed out on the video. You saying stuff that don't make no sense. They need to grow at 20% over 7 years, and I don't think so. If they grow 200% next year, that pretty much what what do you want? It's like you talking out of both ears. One hand, they doing stuff never seen before, right? On the other hand, you saying, well, they can't keep doing it. Well, if you know they're doing things that they've never done before now, why not ride the train for the next 2 years? Why are you worrying about 10 years? They don't do this for no other company. All this stuff he doing right, no, go find it. They don't do this for no other company, bro. Because it's something had never been done before. We never seen Bitcoin over 19,000 at one point. We remember Bitcoin crossed 40,000, then went back down to 17 or 13. And JP Morgan, it'll never get back to 40. Now 60, 59 is FUD. Ain't nobody even talking about it'll never get back up to 40,000. You see what I'm saying? When companies do things never done before, you start seeing stupid stuff like this that people get wrapped up in. Don't get wrapped up in this, bro. Because the number one reason they're going to stay number one is because it takes too much money to catch them. So if anybody talking to you about Nvidia, ask them, well, who's going to catch them? Who? Oh, well, Intel. No, they're not. And I like Intel. Intel is the company that can't get right. Intel would be in bankruptcy court if it wasn't for the federal government. The government is pumping billions of dollars into Intel every single year. Look it up. Intel can't get right. They can't make a profit without the money from the federal government. And the only reason the federal government is pumping money into Intel is because they're trying to keep them up with Taiwan Semiconductor. Hence the name Taiwan Semiconductor. And if anybody know, if you talk to me on the side, you will know that is my pick for the next Nvidia is Taiwan Semiconductor. That is my next biggest holding in stocks behind Nvidia. You know what I'm saying? That's a little inside stuff. But as far as AMD, they've been whooping AMD forever. They don't even consider them a competition. Nobody gets anything from AMD. Anytime somebody gets something from AMD, it's like for research and development purposes. They ain't doing it to, I ain't putting that into my stuff. Now I get it. Let me see what y'all got going on. Let me break it down. They using it for breaking down purposes. Give me a couple of them GPUs and chip. Let me see what y'all got. Oh, y'all ain't got nothing. AMD they just around just to be there because they've been doing it for so long. And if you've been in gaming, you know what I'm talking about. AMD has a horrible GPU. Horrible. Right? And if you do, now I ain't got nothing against AMD. I don't. I really don't. But I remember ordering Nvidia GPUs, having to wait, having to back order, having to, dates pushed back. And they've been, even now, their chips and stuff are already backlogged. So how you gonna say they can't do what they're doing when the stuff that the Black Whale already backlogged for it, they even get through making it. And they already talking about Rubin, the next advance after Black Whale. Rubin ain't even got here yet. You got all these Microsoft and they already, can we get the Rubin? Their stuff is already sold out in the future. That's what people don't understand. People are knocking on Nvidia's doors for product they don't even have yet. That is a company's dream. Imagine everybody wants your hats. You ain't even made the hats yet. Give me 10 of them. When you get them, give me 10 of them. I already pre-ordered 10 of them. Here go deposit, non-refundable. 10 of them. The next company, they getting 10, give me 50. Oh, here come Meta. Give me 100. Oh, Google gonna say Meta got 100, give me 200. Here come Elon with Tesla. Oh, they got 200, give me 500. Matter of fact, give me 1,000. I need some for Tesla and SpaceX and all this. It is, Nvidia has so much of a lead on these people. It's almost like it's going to take an act of Congress to shut these people down. Not shut them down, but to stop them. They have such a big monopoly. You know what I'm saying? And the only, I won't say rival them, as far as CEOs and the way their company is structured and the way they run, Broadcom is the only company that runs better than Nvidia. Broadcom runs a tight ship, bro. Like, they offices ain't even that big. It just, they run real tight. That's why they go look at Broadcom's I'm gonna say yearly, their all-time chart. Just do, that's your homework. Look at AVGO all-time chart. It's going to blow your mind, bro. But y'all know how I feel about Broadcom. They well, I done made some more money on that. But anyway, Jensen Huang of who we talking about? Nvidia. He is better than Elon Musk, bro. Like, you can get mad, with Elon, man. Jensen Huang, he always 3 to 5 years ahead of the game. They having a stockholders meeting tomorrow. I don't know. Well, by the time you see the video, well, I might release it today, but they're having it on the 26th. And that's just for the investor. That ain't earnings or nothing. That's just for the investors, bro. Listen to the man. If you get to look at the minutes, or you can go any financial website, listen to Jensen Huang and how this guy speaks, bro. It's not about if, it's about when. He makes things happen. I'm not saying he can look into the future, but when the future gets here, Nvidia is already ready. It's already ready when everybody else is getting ready. You see what I'm saying? Now all of a sudden everybody want to use AI in their terminology. Oh, AI? Oh yeah, we got AI in our hamburgers. we got AI in our water. Nvidia was already, that's why you see those dips in their profit margins. They was already getting ready for this. Already. You understand what I'm saying? So, and if somebody want to talk to you about Nvidia, whatever, what you think, this and that, bro, at least for the next 2 years, there is nothing. There is nothing. They got it on lock. There's nothing else to buy except Nvidia for the next 2 years. If you want to get rich, buy Nvidia for the next 2 years, bro. If you got a lump sum, go on and get it now. Don't worry about the ups and downs for the next 2 years, bro. That's why anytime they try to talk about Nvidia, y'all look at this. To 2030. We're talking about 2034. In any other stock.
Revenue needs to continue growing at a 22% clip.
They ain't talking about 2034, and they ain't talking about that with Tesla, Microsoft, nothing. 2034. Why we ain't talking about 2025, 2026, 2027? The next 3 to 5 years, bro, it's a sure thing. Like, this is the most surest thing ever in the stock market. Ever. There has never been a sure thing than Nvidia in the stock market. Like I said, because their products are already sold out going forward. There's no debating that. That's why you don't see them talking about that. They try to get you past that because they know you don't know any better. See how the face look? That's why they end up looking like this. You've been doing stocks for 9 years, but you missed Nvidia. Because you believe, oh man, lithium gonna be the next. You know what I'm saying? Oh, you don't need copper stock. Get on this. Oh, you gotta stay with the ETFs. Just keep it steady. A good 8% a year. That's all you need. 8%? What? What are you talking about? These folk their revenues grew at a triple, not 20%, not 30%, not 80%, not 9. Triple digit revenue growth. Bro, nobody has done that. Ever. Triple digit revenue growth. Like, it's crazy to say. That's why you got a lot of people shorting it, because they never seen nothing like this before. They missed it, and they know this is how you can catch them. No disrespect to Warren Buffett and all that, but you holding that Berkshire Hathaway stock, now you finna get caught. You see what I'm saying? You sitting there holding that thinking that's going, yeah, I'm in this top 1%. They can't catch me. And Nvidia is the one that can help you catch that top 1%. You just got to go hard enough to do it, just like Bitcoin or anything else. But I can ramble on and on about Nvidia, man. Like the video. Comment, subscribe. Shout out to the notification game, man. Holla back at your boy. And don't get caught looking like this, man. Just buy a video. Go to get Robinhood, Weebull, what's a Moo, whatever, bro. You can buy a fraction of shares. If you ain't got $100, you can buy $5 worth, $10 worth, $11 worth. Just do it, bro. You know what I'm saying? I put the links in there. Ain't no referral links in there. And I put links in the description, whatever. Just, bro, I'm trying to tell you, next 3 to 5 years, what the price is now? $120 something dollars? Then when the price get to be $280, $460, $590, $600, they start talking about another split. They talking about you missed it. Oh man, you missed it. What was you doing? Worried about the election? You missed it. Why you didn't buy it at 120? Well, the guy said the terminal growth rate and free cash flow margins in 2034. Hey man, I'll back at your boy, man. And you gotta like the video, but there's some good information. Good information, baby. Like the video.